Let's get you all the business news now. In India's benchmark stock indices were a little changed after swinging between gains and losses. The indices ended mixed after 2 days of fall. Metal and energy sectors advanced while fast-moving consumer goods and PSU banks were under pressure. Alex Matthew with a wrap of all the market action.
Well, it was a quiet day of trade in the equity markets here in India. We ended flat on the benchmark Nifty 50, and this is after an entire day flitting between gains and losses. Now, this was par for the course, of course. You've seen 2 days of losses for the benchmark Nifty 50, the first 2 consecutive sessions of losses, in fact, in the month of July. And we are consolidating at the levels that we are at right now. But we are, of course, trading cautiously ahead of a big event globally, which is the Fed rate decision. Widely expected that the Federal Reserve will raise rates perhaps for the last time, and that is having a bearing on equity markets globally. Now, the mid-cap index gained about 0.4% and the Nifty small-cap index was down about 0.1%, but broadly, the broader markets did outperform the benchmark. The India VIX dropped about 12%, which is, as you know, a gauge of volatility, so that coming down is indicative that volatility is also coming down in the equity markets here. Arguably, the story of the day comes from overseas today, and that had a bearing on the metal pack. China announcing certain measures to bolster its real estate sector, and thereby the expectation is that demand for materials like metals will go up, and therefore the top gainers on the Nifty 50 were also metal counters. The metal pack as a whole also gained about 3% in trade. The auto pack as a whole also gained about 1%. A few key names posting results. Bajaj Auto results were in line with expectations, and you'll have Tata Motors that posts results later today. You had the bank index that was down about 0.2%, pressure in the Nifty PSU banking index. That's proving to be a bit of a drag. FMCG as a pack also underperformed. Among the key movers, you had Hindalco gaining 4%, JSW Steel over 3%, Tata Steel also on the back of its results up as much as 3%. Ultratech Cement and NTPC were the other top gainers. Among the losers, you had Asian Paints, which was the top loser, down about 4%. Its results were more or less in line. In fact, its PAT beat expectations, but it still was down about 4%. ITC, Britannia, L&T and SPI were the other losers in trade. Among the other stocks that I was looking at today, you had SJVN, which continues to gain ground on the back of another order win, this one for a 5,000 megawatt order in Arunachal Pradesh. JK Paper gaining on the back of an earnings beat, and Chennai Petro, which fell for the most in 9 months after a profit slump. All told, it's going to be quiet for another couple of days as we look towards the Fed Reserve. That's the expectation.
Nifty is trading slightly above its long-term average, says Max Life Insurance's Mihir Vora. Speaking to BQ Prime, Vora says he sees pockets of attractive valuations in large caps. Speaking about his stock picking strategy, Mihir says the growth estimate for sector are more important than valuations.
At 20,000, I would say, we are talking about the Nifty, which is large cap, of course. I think there are still pockets of attractive valuations. For example, while banking index is almost at its all-time highs, the valuations in terms of price to book, etc., are still not at the pre-COVID levels. So there is some pockets of value in banking. There is some pocket of value even in engineering companies. I would say the large cap engineering companies. So the Nifty, I don't think is overvalued. Little above long-term averages, maybe 5-7% above long-term averages, which is okay. If we deliver growth, then this is justified. So as far as the large caps are concerned, I'm not too worried. I think in small and mid caps, there is a bit of froth happening. The same 200-300 stocks are being chased by PMS, local mutual funds who are getting flows. So that's where I would be a bit more cautious and more selective. So valuation is something that works all the time, that we have to take care of all the time. But more important than valuations is our estimates of growth for that particular segment. So if we are saying that the economy will continue to grow, then corporate lending, MSME lending, as well as retail lending will continue to grow. For the last 5 years, we've seen retail lending being the pillar of growth for banks as well as NBFCs, whether it's in terms of mortgages or personal loans or credit cards or durable finance, microfinance. But it's all been led by retail. Now, if the Indian economy has to grow at 7 to 8%, even if not 6.5 to 7%, it has to come on the back of corporate growth. And that's where we think that, the biggest risk is and biggest opportunity is that if corporate lending comes back, that can be the next leg of investments as well as, the uptick in the market.
Tata Steel reported a dismal set of numbers in the first quarter of the financial year, and the steel maker's June quarter net profit plunged 91.8% owing to high inventory costs during the quarter. Not only did revenues take a knock, margins too contracted nearly 1,500 basis points on a year-on-year basis. PQ Prime's Neeraj Shah spoke to Tata Steel's TV Narendran about the road ahead.
One thing which is happening in China is, at least for most of the last 5 years, they have not been aggressive exporters. So after 2016, China has never exported 8 million tons a month, which it has done in the last 3 months. Okay, but I think that's more a fallout of the fact that the Chinese steel industry produced more in the Jan-March quarter, expecting the economy would take off. It didn't. And already we are seeing exports drop from 8 million to 7 million. And if it comes down to 5 to 6 million level, which it has been for most of the last 5-6 years, steel prices will settle between $600 and $700, which is where it normally lies when China is exporting 5 million tons a month. So I think we are seeing a little bit of this correction going on in China, because China is very clear that they don't want to be a big exporter of steel, because they also have very aggressive carbon footprint targets, and they don't want to be importing iron ore and exporting steel and leaving a carbon footprint behind. So I see this correction happening. India demand growth to be strong, and things will balance out, and that's why I feel that H2 will be much better than H1.
IDBI Bank Limited's net profit rose 61.9% year-on-year in the April-June quarter due to higher core income. Net interest income surged 60.7% year-on-year. The bank's asset quality position also improved in the quarter. BQ Prime spoke to Rakesh Sharma of IDBI Bank. Listen in.
One is that, even including technical write-off, it is 99%. But if we exclude technical write-off, then also provision coverage ratio is around 92%. So that provisions have been high. So, but I had mentioned earlier that whether the account is in technical write-off or in the live account, so our recovery of efforts, there is no difference. So both ways, our department, NPA management group and credit monitoring group, both they continue with their efforts for recovery. And this, with the provision coverage ratio being high, whenever we are able to recover, mostly it is going to the profit, either way of, going to other income, provision reversal or interest income, as it has happened in the current quarter. So that will improve the profitability part. So, 99% having provision, it's a sort of, strong balance sheet, hidden profit for us.
Byju continues to be in the eye of the storm. In a scathing statement explaining its exit from Byju's board, Prosus said the decision to exit was taken after the executive leadership disregarded advice and recommendations. Rishabh Bhatnagar with the details.
Well, yes, the string of bad news for Byju's doesn't seem to end. This time, it's Prosus, an investor with a nearly 10% stake in the edtech giant. They've issued a scathing statement explaining why their directors has resigned from Byju's board nearly a month after the director actually resigned. So today, Prosus said Byju's regularly disregarded advice relating to strategic, operational, legal, and corporate governance matters. Prosus also explained that as Byju's grew over time, its reporting and governance structures did not evolve sufficiently for a company of that scale. And because of these deficiencies, its director had to resign. Now, why this statement is making the headlines is because Prosus is a large investor with about $500 million invested in Byju's. In that context, this is a bold statement given that investors that put in such large sums of money don't usually go public with their feelings. The two other board members that had resigned, which were Peak 15 partners G.V. Ravishankar and Chan Zuckerberg Initiative's Vivian Wu, haven't issued such a statement. In response to Prosus, Byju simply said it has noted these observations and has updated these investors about the steps taken to improve corporate governance and financial reporting.
And that's a wrap of all the business news.